Hey, what's up guys, it's Jonathan here, back with another public stock portfolio update. So as usual, we'll do a quick recap of some of the moves we made in the public portfolio, and then we'll do a recap on how all the positions are currently doing. I made a pretty significant shift in the portfolio recently, so I'll also explain what that shift is and why I made it. So if this video provides any value, please consider hitting the like and subscribe button. They both greatly help out the channel, help push this video out to as many people as possible. So let's get right into it. So this week we did quite a bit of reshuffling in the portfolio, and I'll go into detail why we made this shift later on in the video. Let's just go over some of the moves that we made in the portfolio first. And as always, if you guys want to see me make these moves in real time, there's a link in the description for public where you can get a free stock worth up to $70. So if you're interested in free money, check out that link in the description. And let's get into it. So all the transactions we made this week were on Friday. And the first move that we did is that we closed out our Disney position. So we sold $5.33 of Disney at $141.60 a share. And this was mostly driven by two reasons. So first, after seeing what happened with Netflix, where the price of the stock got cut by 20% after it released very weak guidance, and I believe at the same time Netflix got slashed, Disney did get slashed about 7% as well. But my thinking is that Disney is also going to suffer the same fate as well. A lot of the future subscribers have been pulled forward the past year or two due to COVID. And then also the consumer is starting to become more strapped for cash as the saving rate starts to return back to normal. So I think that some of the first things that could get slashed are subscription services. Also recently I've done a little bit of research into Disney's numbers. And in my opinion, I think that Disney is selling for a pretty rich evaluation right now, even though it did significantly drop this week. So in the long term, this lofty evaluation doesn't necessarily matter if you plan on buying the stock and holding it for the next 5 or 10 years. But in the short term, I wasn't really a big fan of that. And there's also another reason why I sold out of this that I'll go into later on in the video. So on top of closing out Disney, we also closed out our position on DocuSign. And we sold it for about 79 cents at $122.74 a share. And with DocuSign, I also did some homework on that as well. And I wasn't the biggest fan of their valuation, especially comparing it to other software-like companies. So that was the reason why I decided to close out DocuSign as well. On the buy side of the moves that we made on Friday, I did buy some SoFi. I bought about $3 of SoFi at $13.96 a share. For the most part, this was a buy to dip purchase. Stock did run off of the news that SoFi did receive their national bank charter. But still, even at $14, this is still a really good price to buy SoFi in my opinion. And I really think that SoFi has a chance to become almost the JP Morgan Chase of the fintech space. And this is mostly because of all the different financial products they offer under one roof. We also bought some Tesla. We bought about $2 worth of Tesla at $960.92 a share. And this was just a buy to dip purchase. Tesla has been one of the growth stocks that have held pretty strong during the sell-off that we've had over the past couple of months. But we have started to see some more weakness in its price. I thought it would be a really good time to pick up more shares. We also bought some Enphase. We bought about $1 worth of Enphase at $126.38 a share. Another buy to dip opportunity. At $126 a share, we're basically paying May 2021 pricing. In the spring of 2021, we had a lot of softness in the tech space. So to see the price of the stock revert back down to the 120s, when in my opinion, I think that it should be a stock well over $200, for me is a no-brainer to buy the dip on this one. We also bought some Etsy. We bought about $3 of Etsy at $154.22 a share. And again, another buy the dip purchase. With Etsy in the 150s, we're paying about December of 2020 pricing on this. And one thing I've said about Etsy, especially comparing it to like Enphase, it's not a stock that gets easily beaten down. So to see it in the 150 price range, I personally think it's a perfect time to go and pick up more. So we also bought some Matterport as well. We bought about $2 Matterport at $10.13 a share. And if you recall, Matterport is a former SPAC. And most SPACs start off trading at a par value of about $10 a share. So right now you're basically paying what the PIPE investors paid for their shares. What makes Matterport unique as a SPAC is that unlike most SPACs that are usually significantly overvalued, Matterport was pretty fairly valued at a par valuation. I have no problem buying the dip on this stock, and honestly, this was probably one of my more favorite dips to buy into. So we also bought some Robinhood as well. We bought about $3 of Robinhood at $12.95 a share, which is new all-time lows for Robinhood. But I mean, to be honest, it seems like every day we get new all-time lows for Robinhood. Maybe at some point this will be a penny a share. Who knows? Also, we bought some NVIDIA. We bought about $2 NVIDIA at $233.18 a share. And if you watched the video that I made on NVIDIA, I stated in that video that I would like to start buying this stock once it hits about $250 a share. And I really like it under $225. Now, I did break that rule and I did buy some while it was in the 300s. But I think now, since we're starting to see it fall under $250, I'm probably going to start buying it a little bit more aggressively, as the valuation makes a little bit more sense at these levels. So now let's go into iPad. I'll give you a quick recap on how the portfolio is doing. So currently the portfolio is valued at $150.07. And we're down about 26% all time on the portfolio. It's kind of funny because every week it seems like I'll go and I'll deposit the $10 that we deposit into this portfolio every week. And it seems like the portfolio just fall $10 in value. So it almost seems like we're just kind of flatlining at this point. So the first position we have here is Tesla. Even with the recent Tesla beatdown that we've seen, it's still up about 7%. And it currently makes up about 21% of the portfolio. Our next position here is Enphase. Enphase has taken a more significant beating compared to Tesla, and it's down in our portfolio about 23%, and it makes up about 18% of the portfolio. Our next position is Robinhood. Our Robinhood position is down 53%, which at this point doesn't even shock me anymore. Next week, we could honestly do this video, and if it was down 90%, I probably wouldn't even lose sleep. And currently, it makes up about 13% of the portfolio. Our next position we have is Alphabet. Recently, some of the mega caps like Apple, Amazon, and Google have started to take some more significant losses recently. I believe just this past Friday, Amazon was down almost 5%, which is almost unheard of to hear Amazon is down 5% in one day. Currently, our Alphabet position makes up about 11.5% of the portfolio. Our Etsy position is down 25% now, and it makes up about 10% of our portfolio. So our next position here is NVIDIA. I made a whole video talking about why I like NVIDIA. I'll probably link it somewhere in the video here if you want to check it out. Currently, our position on NVIDIA is down 16% and makes up about 5.5% of the portfolio. Next position we have is Amazon, like I just talked about. Our Amazon position is down 17%. I gotta remember to keep buying more Amazon. I've said that I want to buy more Amazon and I never get around to doing it. But I do want to buy more Amazon, especially if we start to see more softening in its share price. And currently makes up a little under 4% of the portfolio. Next position we have here is Cloudflare. Currently our Cloudflare position is down almost 28%. And it makes up about 3% of the portfolio. For now, I'm going to cool down on buying some of these high PE names, kind of like the DocuSigns and the Cloudflares. I think until we get some more clarity about how the rate hikes are going to go, there's still going to be a lot of diciness in the software space. So the next position we have here is Matterport. Our Matterport position is down almost 40%. It makes up a little over 3% of the portfolio. Like I said, you're basically paying SPAC IPO numbers for Matterport. For me, I think that the fair value of Matterport is around $20. So given the fact that you're getting it basically half off is like almost a no-brainer why you wouldn't buy it, as long as you believe in the company long term. The next position we have here is Palantir. Our Palantir position is down 40% at this point. Like I said about the other software stocks, I'm not really interested in adding to them at this very moment, but I definitely will be if we start to see a more rapid U-turn in the market. Currently makes up a little under 2% of the portfolio. Next position we have is SoFi. This is actually a new position in our portfolio, and currently it's down about 0.5%, and it makes up about 2% of the portfolio. I definitely do want to continue to add to this, as I think SoFi could be a major player in the fintech space in the future. The next position we have is Trade Desk, and our Trade Desk position is down almost 34%, It currently makes up about 1.75% of the portfolio. I'm still bullish on my advertising thesis. For 2021, Trade Desk will be a major player in that space. So next position we have is Redfin. Redfin position is down almost 42% at this point. It currently makes up about 1.5% of the portfolio. I think for Redfin, it's going to be a very turbulent start of the year. And I think it may recover maybe the second half of this year or maybe in 2023. We'll just have to look out for that. Currently, I'm not adding to Redfin. I don't really plan to add to Redfin. And we start to see more aggressive U-turn in the trend on Redfin. Next position we have here is Bitcoin. I haven't really added to our Bitcoin position. I know Bitcoin just recently fell under the $35,000 range. I think that the $35,000 price point for Bitcoin will be a very interesting point to see what's going to happen to Bitcoin in the future. Because here's what you have to realize is that most people's cost basis into Bitcoin is somewhere between $35,000 and $40,000 per coin. It's one thing when you lose your gains. So like, let's say you bought something at $35,000, it goes up to $70,000, and it comes back down to $35,000. Yeah, it's not ideal to lose those gains, but usually most people don't really care. But when people start losing their principal, then it's a whole different story. So it'll be very interesting to see how the price of Bitcoin and even Ethereum for that matter act in the next couple of weeks. So if you're invested in cryptos, keep a close eye on that. So with our Bitcoin position, we're down 27% and it makes up about 1.5% of the portfolio. So when it comes to Ethereum, our position is down about 37%. It makes up about 1.25% of the portfolio. And like I said with Bitcoin, with Ethereum, it'd be very interesting to watch out where the price goes from here. I think that the average cost basis for retail investors when it comes to Ethereum is somewhere in the neighborhood of $1,500 to $2,000. I believe Ethereum right now is at about $2,500 a coin. There is a little bit more space before those fears start to come in. So like I said at the beginning of the video, there has been a pretty big shift in the portfolio. And some of you may be able to tell by some of the moves that were made. But basically what I did is I sold off some of the positions that I don't have high conviction in. I understand the business model of DocuSign, I understand the business model of Disney. And I think that both those companies are very good long-term plays. But I would much rather at this point concentrate my money into companies that I like a lot more than those two companies. So my overall shift in all my portfolios, this portfolio and even my private portfolios as well, is to concentrate my less conviction stocks into higher conviction stocks. I really just want to focus on those core positions. So I believe starting off this week, I had about 40 different stock positions, and now I have about 25, 30. So it just makes it a little bit easier for me. It makes it a lot easier to track things. I still feel like I have a good amount of diversification. In terms of risky business models compared to more stable business models, this isn't really the type of market that I want to speculate in. Just given how much pain there is in the market and how much uncertainty there is and how the Fed's actions will affect the market long term. So from this concentration of positions, I have raised quite a bit of cash. And for me, I plan to use that cash to dollar cost average into my favorite positions. So I know in the earlier video, I did state that I want to look for a bottom and buy at that bottom. But honestly, I really don't know if we're going to see a bottom like that. And you could see the market U-turn like in a matter of like 1 or 2 days. Like it could be a very quick turnaround. For me, I'd much rather just dollar cost average. If things become cheaper over time, perfect. I'll just keep dollar cost averaging. I feel like most of my core positions are at really good prices right now. So I would much rather just dollar cost average, and if it keeps going down, awesome. I'll just keep buying at lower and lower. I think what we should really look out for is what the Fed says on Wednesday about interest rates and hiking interest rates and how the tapering is going. Because I think that that's really a bulk of what's causing a lot of the sell-off that we're seeing. So that's all I got for you guys this week. Thank you so much for watching. If you like my perspectives and this video provided you value, please consider hitting the subscribe button. If you made it all the way to the end of the video, you'll probably like the other videos that I post. So make sure you hit that notification bell so you get notified every time I post a new video. Also, let me know what you guys think about the trades and how the market's acting overall in the comment section down below. I would love to hear from you guys. Also, check me out on all my socials. I've been posting more often there, so if you're interested, follow me there. And thank you so much for watching. I'll see you guys in the next video.